Can I get a mic check from somebody? Just make sure the input's coming in on your guys' end as well.
Sounds great.
Got it. Thanks. All right. So we're live on YouTube. Just going to stick to YouTube today. Let's go through this session. There's a lot of stuff that we can talk about. I loaded up a few web pages and stuff that we can look at. We'll look at some of the Bukowski blog stuff, and then also talk through new article that I posted earlier by JC Perrett and the All-Star Charts guys talking about energy stocks breaking out again. Obviously, shout out to All-Star Charts. They happen to be one of the few groups or organizations, whatever you want to say, that tend to trade the same names as we do. Just ironic that we tend to get in a little bit earlier than them, probably because we're not managing tens of millions of dollars for people. So we have the flexibility to get into positions way faster than them. So actually, let's start off with that. I posted the link. I'll post it one more time. Posted the link in Discord. If you want to read through it, feel free. But essentially, they posted a chart here talking about XLE itself. Gave some pretty easy levels to understand, right? Above, below, it's the same thing that we run with risk on, risk off. And they're saying essentially above 79 with an XLE, they want to be long. It's kind of the same thing we were talking about. Matter of fact, it's legitimately the same thing. It's so funny to me that they're legitimately always 1 week after we start to do stuff, they post shit. But either way, it's nice to see that there's some confluence here within this XLE move. Some of the bigger guys in the market are taking notice as well. But within this article in particular, they bring up XOP, which should also stand out because that's the industry we were targeting, right? And so people are saying, supposedly to them, that XLE has run too hot, it needs a larger time to reset, etc. All-Star Charts and JC Perrett says, well, how can energy be overbought when XOP has not even technically broken above its risk-on level that they're utilizing for a cyclical change? So they're looking at this from a different time frame. Obviously, they hold positions way longer than we do. But they're going, shit, XOP hasn't broken above the mid-2010 highs yet. How can this be overbought? And so they're making the bet here that XOP, right, the oil and gas exploration and production ETF, is going to break that high at around 175, 180 and going to continue up. So primary trend is up within XOP. They expect XOP to continue and break that level. As of right now, if we look at COIFIN and we go to US sectors, we go to US industries, we bring that to year to date. Of course, COIFIN, I don't understand what's going on with COIFIN, but I have to like reload it every 2 minutes or the charts just don't populate. It's kind of annoying. And I guess they're just not going to load at all. Charts just aren't going to load on COIFIN. Okay, well, that's a bummer. Anyway, XOP is one of the leading industries on the year-to-date chart. Just so happens that we're also pressing into a prevalent level that goes back 8 to 10 years. This is important. There's a reason why we were looking to go long XOP. And we're currently in some of those positions right now. So they looked at OIH as well. Obviously, that's a part of the market that we have looked at extensively. XOP and OIH are the two most volatile or more volatile industries within the energy sector that we have traded over the last 8 to 9 months. Both OIH and XOP continuing to hit higher highs here. So we've got the big guys at the top finding the same sort of ideas in the market that we are. That's just why we started buying this stuff again. So it's just always nice to see confluence in our ideas, okay? I don't know. Okay, here we go. Now COIFIN decides to load. So now I got the charts. I'm going to go ahead and post that year-to-date industry chart here in Discord. You can see exactly what I'm talking about. XOP is up 60.64% on the year. So from a relative standpoint, this normalized performance chart going back year to date, XOP is up the most, right? So from January 3rd, XOP is up 60.64%. OIH is up 38.63%. Let's talk about that really quick. If you've been here for a while, this is going to kind of beat a dead horse, but this XOM-CVX concept is applicable to what's going on here, right? So I don't need to go through again why we bought XOM over CVX. We've talked through it a few times already. Shouldn't be a surprise that XOM is up more so than CVX. That's why we bought, right? That's why we bought XOM instead of CVX. Here's my question to you guys. Looking at that year-to-date chart. That year-to-date chart shows XOP and OIH, both. If you would have bought on January 3rd, OIH at this point, right? We're going to take from the absolute price point right now on January 3rd. We're not going to look at what's happened in between. If you bought OIH, you'd be up, right? 38.63%. Let's say your buddy bought XOP, which is up 60.66%. Both of you are technically winners. But between you two, who's the winner? The buddy that bought XOP, right? So we always want to be trying to find the winningness stock, not just a winning stock. And I tweeted that, and I think that's an important distinction. You can have two winners in the market. That's totally fine. But what we do in here is try to always be the winningness, right? We want to find the greatest possible strength that we can and buy that area. So right now, it's XOP. There's a reason why 9-10 days ago when we started looking at re-entering these energy positions, there's a reason why we said, listen, OIH is great, but XOP is where the strength is right now, right? And so we made a decision as a group that we were going to be looking to go long XOP names, not necessarily OIH names. Okay, so this matters, right? We played out with XOM and CVX. It's playing out from these Koyfin charts. I'm posting the quarter-to-date chart here. XOP is now leading on the quarter, up 27.65% after PBW has broken down 26.8. Okay, so PBW was up 41.81% and it's now only up 26.8%. So drawing down PBW, drawing up XOP. The reason why we wanted to go long there. Okay, so take that concept with you for the rest of your life. In this group, out of this group, trading, not trading, managing a 401k, doing whatever you want. The greatest odds lie in relative strength, and that's what we want to focus on, okay? Let's see. Anything else we want to go over in regards to that All-Star Charts article? I don't think so. Any questions regarding that stuff? Let's talk through moves today. Anybody take a position today? First off, let's start with that. Anybody open a position here today? Most of us opened positions last week, so there's probably not too many positions being opened. Vin's brand new, makes sense, opened XOM here. The only thing we want to worry about is a risk off level within XOM. Let's go ahead and talk through that really quick. So obviously the guys that bought it last week have an advantage, right? Guys in the last week, or bought it last week, actually 2 weeks ago, some of you guys were opening up positions because this was 7 days ago and you guys bought prior to the breakout on that sim try. Some of you guys have the advantage, right? Obviously your original risk off levels are now moot and you're skewing those stops up. You should not be taking XOM for a loss whatsoever after a day like today. Any new positions up here obviously are going to be at a disadvantage because XOM is already up 6-7% from the original risk on area that we were targeting. So Vin is going to have a different set of risk to reward than the rest of the guys that got in. There's nothing wrong with that. It's just different, and therefore it should be managed different. So Vin, as long as you have that risk off area, no problem. For the rest of you guys within XOM, obviously you're going to want to probably be defending the low of day today. We might not get an additional push up tomorrow. Who knows what's going to happen tomorrow? If we do, then you can utilize something like Thursday and Friday highs as your new risk on, which is somewhere around $100. You can use that area, but as of right now, your original risk off level was somewhere around 92. Right now, it should probably be somewhere around 98, and you should be covering your entry. So if you're up and over 100% on these XOM contracts and you have a few of them, think about turning this into a free trade. Gives you a little bit more wiggle room up towards that 103 to 105 original PT. BTU. Through BTU. BTU is a cool name. We have had experience trading this. We traded this back in February during that crazy run up. Did you bought shares, I'm assuming? Or did you get contracts? Let me know if you got shares or contracts. There is open interest on the chain here, but at 83.8 IV, you're going to be wanting to spread this contracts. Let us know which contracts you're looking at. Was a little aggressive and didn't spread 10/21/35C. Okay, let's look at that really quick. 31C, 0.4 delta. You paid what? 210 for them. or I'm assuming you're slight up because you rebounded off the lows. You probably paid around 2 for them. Oh, 35C. Whoops, I was looking at 31. My bad. Got it. Okay. So you're up slightly. You paid around $1 per contract. 0.26 delta right in the wheelhouse. Okay. So yeah, this is an aggressive play for sure. 83.8 IV. So obviously he knows this. For the rest of you guys that aren't equated as much, 83.8% is a high IV. Generally speaking, you're going to get IV crushed unless the stock continues to move at a decent rate. We tend to hedge against that IV by going spreads. It's not perfect, but it does hedge against IV crush. At a 12.9 IV rank, though, BTU is very accustomed to being up here at this high IV. So, okay, Marcos is in BTU. It's a commodities / energy related name. Coal, BTU, Peabody. James and I traded this back in February. This was a crazy runner. I'm going to add this to the positions tab, and you got in off of the 26.5 pullback. Got it. Okay. Got into NUE as well, and it was a spread. Go ahead and talk through that. So these are probably going to be your two more risky commodities related plays. NUE is a steel company, 36.84 billion large caps, 2.75 ADR, so it does move a little slower than usual. Or not usual, but a little slower than what we normally like. I'm assuming you got October 21st. Yeah, you have earnings on October 20th. 160, 165 called debit spread. Let's see what that calculates out to. Right now you're grabbing them for $85, max profit of 415. So that fulfills that 4 to 1. You're getting about what? 4.5 to 1. P50 of 63%. Market doesn't think it's bad. That's kind of crazy. Okay. So there's about a 62 to 63% chance that these things hit 50%. At least that's what the market's telling us right now. 48.3% IV, so he could have just bought calls if he wanted to. He went with spreads, I'm assuming, to lower the cost basis. Yeah, okay. From a technical standpoint, I don't love NUE, but the options play that you chose makes sense from a risk-reward standpoint, and it's not that expensive, so cool. I'm going to add this to the position list as well. Okay. Good job, Marcos. All right, I'm going to start doing a roll call here. I'm still updating that charts and setups tab. So I'll have all of the current positions that I have on this watch list on there. Let's go through OXY first. Who's in OXY? Just want to make sure everybody has their level set, their stop set. OXY had a huge day, up 6% from peak to trough at one point off of 4.49 ADR, so obviously a 1.5x-ish ADR move. We talked about prior, right as we were going to lunch at around 11 a.m., that these were probably maxed out, that they were probably not going to move anymore after ripping off of the open, considering most of these went up 1.5x ADR, and lo and behold, that's pretty much exactly what they did. The good thing is that they have relatively held their moves, so that's awesome. Did not know what to expect during lunch and the beginning hours of the afternoon session. Sometimes these things sell off, but they held up. They held up really well, so I'm very surprised, and it's awesome. I can't imagine a final thrust here end of day that pushes these into high of day, but end of day generally, wouldn't surprise me to see some buying pressure come in and see some of these bigger names, OXY, XOM, CVX, stuff like that, run into the close. I doubt we hit high of days though. So OXY, we have Dawn and Hanno. Everything good for you guys? Know where you're right, know where you're wrong. Setup makes sense as long as we're above 73.50-ish, 73.30. Everything looks good here. Those contracts should be up. Okay, so we already went through XOM. Let's talk through First Solar, since I know we still got guys in First Solar. How many people are still in for solar? Dustin is probably still in it. Anybody else other than Dustin still in for solar? Change of direction setup that he grabbed. These things were up close to 500% at one point. I'm assuming they're still mid threes. I know you've trimmed some. Mid 300s, potentially around 300. Either way, this thing is holding up well for all intents and purposes. We did talk earlier that First Solar should not be generally looked at as a semiconductor play. Yes, it is technically a semiconductor play. SMH has been beat to shit lately, and once again, it's down 0.86 today. But we went through the holdings, right? This is where, this is a part of the TTI edge. We went through the holdings and saw what type of ETFs actually held First Solar, and the major ETFs that were holding First Solar with any sort of weight were clean energy and solar ETFs. So even though this is technically a semiconductor company, its exposure is far limited in the semiconductor ETFs. Way more shares held in those clean energy and solar ETFs. And so we know if those clean energy and solar ETFs are holding up better than semiconductors, it gives First Solar an opportunity to hold up better. And it is. It's holding up near all-time highs. We like that pivot point at around 119, 11850. Currently at 12277, and it's up on the day 0.84. So this is showing relative strength across the industry as well. TAN is down today 0.7. PVW is down today 1.06. First Solar is up today. So take that for what it's worth. A little bit of Dow theory there, right? At the very minimum, it's a yellow flag. If the ETFs aren't working in the direction that you want, you don't want to close it yet. I understand why, because you're in huge profits and you're expecting this thing to continue its pop because you're at all-time highs basically. Understand though that you probably wouldn't want to be adding into this position as long as the ETFs aren't backing up that idea, right? So Dow theory, most people in here should probably have a general idea of what that is by now. Let's talk EQT. Anybody? I know there's two people here, Alex and Hanno maybe. Mike as well. Okay. Are these things green or are they break even? Mine are green. Okay. So this trade that we were originally looking at, we liked this because unlike all of the other names that had broken down and run down 20+%, this didn't. For whatever reason, as energy started showing us around a bottom and some consecutive higher highs, EQT was pressing into a new opportunity to make higher highs itself with no previous price action to the left going back to about 2014, mid 2014s. But for whatever reason, the market is stalling this out. It doesn't like it above 50. We've hit this area. We stuck it back in May. We're sticking it right now. So it's kind of a bummer of a trade. But having said that, we're not being stopped out. And something that Callow and I went over in a one-on-one on Sunday was that concept of time-based stops. So what I'm going to ask you guys really quick is, did you guys buy September's or October contracts on these? Because I know this EQT position is probably a week old at this point. Octobers, everybody grabbed your Octobers. I just want to make sure if you have Octobers, there's no reason to do anything. If you have Septembers, you're going to have to start thinking about closing these even if you didn't get the move that you wanted, because eventually Theta is going to start fucking you. Pardon my French. And also that time-based stop loss system that Callow and I were talking about. Don't let a trade that hasn't stopped you out turn red. That's what Callow and I were working on. He was in a few positions that were minor green, minor red, minor green, minor red. Not enough to stop him out, but then just because he was holding them for so long, premium started to decay. So, okay, not a terrible setup still. Still expect this to hit that PT up near $57, $58, but it's taking its sweet time. If you have Octobers, there's nothing to worry about. September's probably think about closing that. Okay, let's talk through SLB since Mike posted that. Schlumberger, our favorite French oil field company, headquartered out of Houston. I have a very terrible relationship with this chart. So, Mike, you want to talk through this?
Yeah, I think Heno brought this chart up, and I just noticed when he brought it up, I just noticed Schlumberger was hitting a pullback point for me based on the previous day's RVol, which was Thursday, which I didn't get in that screenshot. But Thursday's RVol was over average, so the pullback on Friday, so I just decided to enter. And if it broke below $39, that's where I would just cut the position.
So everything is working in your favor right now?
Yeah, today's move has been positive, so
cool.
Yeah, we'll see. No low RVol today, so I'm hoping that just continues and melts upward with the rest of the energy.
Div day coming up on the 6th of September as well.
Oh, thank you for that.
Yeah.
I'll probably close right before then, and then think about repositioning after. See how div day reacts.
Just so everyone's aware, usually div day you get short-term fluctuation to the downside by the amount of the dividend. Sometimes it doesn't matter. Sometimes it matters a lot. So if you're in a position and you're kind of on the cusp of already closing it and you're coming up on a div day, more often than not, what we've noticed is that it would have been more profitable to close the position, market close prior to the div, and then if you want to get back in that, find a new risk on level, because you'll get a short-term crash generally the next day. I don't want to say crash as in like a huge 10% move. It could legitimately be $1 depending on what the div is, but those hurt the premium on those contracts, and then you essentially have to claw that premium back just to get to break even before you start profiting again. It's just not worth it. So we'll make that decision when or if we get there.
Yeah, cool. If you look back on the previous div day,
it's down.
It's a significant drop off. Yeah.
It looks like every single div day this thing closes red and then continues its rally, but on it, this is the one disconnect that technical analysis has with the options pricing mechanism, right? It's that if you take just that day and you're like, well, shit, it's one big red day, but then 7 days later it was up. Like, yeah, it's not that easy, because these contracts can decay so rapidly that it might take 3 or 4 up days to get back to break even before you're making profit again. And so, okay, cool. Thanks, Mike. Your mic's open, by the way.
Yep.
Okay, so SLB, cool. So it looks like we're in a bunch of different energy. Anything that I don't have on the list here in regards to energy? Anything that anybody opened up? We'll go through X in a second. I want to get through names that we're currently in. I know that Dustin is in ALB. I think he's the only guy that's in a chemicals related name right now, so I'm going to post the chart. I'm not going to go through it though, because Dustin already knows where he's wrong. We talked through this. ALB minor down today, 0.32. But it has reclaimed that previous risk on level at around 285. That's what Dustin was originally going for. So there's that. EQNR is a trade that a few of us are in. Down day today, down 1.18%. Not worried about this at all. These things were up 150, 200% at one point, and they're still up. So if you did not turn this into a free trade, it's going to be a little bit harder to sit through. Your risk is going to be a little bit more than the guys that were able to turn this into a free trade. But that $43 area still looks good for a potential PT. Anybody still in ON, or is everybody out of ON at this point now that Tim closed? Okay, I asked. Just want to make sure. I don't want to sit through a one-on-one with somebody and say, hey, I'm still holding ON. So if forever hold your peace at this point. It was a good trade. A bunch of you guys made some cash on that ON trade, and for right now, we're just going to put it on the back burner. We're still above a previous risk on level that we were using to get long at above 68.5. But there's no point in adding into losing trades. So as of right now, the ON, even though it is testing short-term moving averages, it's testing that risk on level, potentially could be a BRB. We don't want to buy it because semiconductors are not acting the way that we want them to. So just because this is a market leader does not mean that we want to buy it. We want to see confluence within the industry and or sector. And as of right now, the sector, XLK, selling off. Industry, SMH, selling off. ON, makes sense that it's selling off, right? So Going to completely avoid that. And I think that's it. Anybody in a position that I didn't mention? Just want to make sure everyone gets their shit straight. Everyone knows exactly what they're looking at here. Okay, but that's it. We'll look at X and then we'll scan. This is not a chart that I would buy. X, not like whatsoever. Matter of fact, NUE in my mind looks better than X, but I don't really like NUE either. Sorry, Marcos. But I know X is... Let me pull up the chain really quick and look. I know that it's has a bunch of volume on there. What would be a profit target for X, Alex? 30? So you got October 30s going for about 77 cents right now, 0.26 delta. It's a 62.7 IV. There's lots of open interest on those contracts if you want. You can also get cute with some 29.30 call debit spreads. $23 to get filled on those. 77 profits, so you get about a 3-to-1, a little bit more. Or you can push those strikes out one more, 30-31 call debit spread, buying it for 17, max profit of 83. So a very highly rewarding trade if it does play out. I just hate this chart. But 30-31 call debit spreads for October, max loss 17, max profit 83, P50 is 61, 62.7 IV with a 26.6 IV rank. It's pretty crazy risk to reward. If you like steel and you like X, that's a pretty damn good play from a risk to reward standpoint. Okay, let's scan. Let's do that. As I pull up the scanners, I'm going to run through the top 5 stocks per sector. I'm not going to read them all out, but I'm going to look at all of them. And if anything stands out, COP stands out. ConocoPhillips. $146 billion large cap, 3.23 ADR, currently less than 10% away from new highs here. Is this all-time? Yeah, okay, ConocoPhillips is less than 10% away from an all-time high now. Pretty crazy to think about. This was a Dustin play. Dustin, I don't remember if you ended up making money off of your COP play, but this will always remind me of you because you were in it for so goddamn long. So XOM and COP both look great here. From the floor in July to current price, COP is up 46%. Put that into perspective, XOM is up 24%. So COP, all intents and purposes, showing the better strength here across the mega caps, large caps in oil right now. So COP. Look at the chain really quick. It's not as traded as Chevron or Exxon, but there should be some open interest. We can go out to the Octobers. On those Octobers right now. Let's see. All-time high is going to be somewhere around 124, 125. There's no point in not buying something up near all-time high if you're only 10% away. You're looking at Octobers. The 120, 125s don't give a decent enough R to R. You're getting about a 2.5 to 1. That's not something we want to do. 120, 125. Oops, I just said that. What about the 125, 130s? Max loss 109, max profit 391, so a little less than 4 to 1. But it's pricey. It's over $1, and it's less than 4 to 1. So not sure if this is the trade that, if you're not in a large cap energy name right now, looking at a push into price discovery like XOM, COP looks like an opportunity targeting that 125, 130 area. Post the chart. Div is coming up on the 28th of September for that. Running through these charts really quick. Give me one sec. NVIDIA is losing a pretty obvious level here. This is not great for semis. NVIDIA is a large, large name in the tech space, and we're oscillating between the 50 and the 0 RSI right now. NVIDIA looks really vulnerable right now to the downside. I don't remember who I was arguing with, but I aggressively drew arrows on this chart. It must have been late last week. Apparently somebody said that they should be buying NVIDIA, and I think I was aggressively drawing arrows that the trend is down and there's no reason to be buying NVIDIA until that changes. And as of right now, that is still going down. So that doesn't look great. That 16650 level, losing it, currently sub 160. In my mind, this looks more bearish than bullish. Not a great look for a big tech company. Netflix and Disney both in the headlines today, pulling up XLC slightly. Disney up 0.11%. Netflix up 1.4%. Neither of these are in giving us any sort of real risk on levels though. And everything else looks like shit. Okay, so energy is really the only place we still want to be long. So let's scan through. I'm assuming that if we hit these 50-day highs, we're going to get mostly energy. We're probably going to get some garbage biotech names at this point completely out of that stuff. So $69 names, running a basic 50-day high, average volume over 1 million, optionable and shortable. Filter by sector. Ian day traded PDD today, Pinduoduo, that's 50-day high. Had a pop up today, up and over 70, currently being sold off though. Once again, COP. I'll flip this over to the charts tab so I can go through these. There's not that many names on here, and I'm assuming tonight's session there's not going to be a whole lot to scan through, just letting you guys know. So tonight's session we're probably going to be more focused on some sort of material or reviewing trades because there's not a whole lot of scanning that's going to be going on. CRK, Comstock Resources, an XOP related name, mid cap at 6.33 ADR. Checking the chain on this really quick. Probably not going to be that much open interest. There's more than I thought, but this is probably going to be a shares trade. $20 stock, mid cap with a 6.33 ADR. That fulfills Dustin's requirements for shares. This is an XOP related name. So we started off this session with talking about how XOP was coming up and pressing into a level that it hasn't tested in years. And so the All-Star Charts thesis is, listen, if energy is overbought, why isn't XOP overbought? Maybe XOP is going to be the next big breakout there, and it's going to continue XLE forward. We're in the same boat. We didn't make that argument, but our thesis would back that up. So CRK is one of those XOP mid-cap names. We made some money back in February and March trading this exact type of stock, not this stock in particular. Just to give some reference here, the stock is up about 95% off of the July lows and looking to break out up and over $22. It has not been at this value since this is going to be a 7-year high. CRK, Comstock. High and tight on CEG. Hell yeah. Give me one sec. We'll flip through that. I'm sure that's going to be the last one on my list. Sinclair Corp. I don't like this name actually. Just flipped over into a quote unquote large cap. I don't even know if is 11 billion even considered a large cap anymore, considering all the money that's in the market. Dino showing 50-day highs. I don't like this chart though. It's going to be better setups than this. Devon, continue to throw that one out there, up 53% off of the July lows. Currently only 6% away from price discovery mode. I'm going to continue to post this. This today is up 2.65%. It's a $48 billion integrated oil name with a 4.34 ADR. Yeah, Ben, you're right. There's going to be some setups that we like from a technical standpoint, but there's going to be zero availability on the options chain, and therefore people can't play it. So definitely something that, not to be a dick, but real trading groups understand that you need volume to trade and open interest. You can't just call out nice looking charts. So yeah, we unfortunately can't play everything that we find. HES, somebody called that out yesterday, another integrated oil name. This is a $39 billion company for 3.44 ADR, so it ticks both the boxes on that. I believe, though, like the Dino play, I don't think HES is going to have too much open interest. Random contracts, it does. They went out and bought the 145 calls in October. Those are expensive, though. I don't know. I think a lot of these energy-related names are going to look the exact same. If you notice, a lot of the charts look damn near the exact same. That's because they're correlated around the same asset for the most part, which is oil. HES, though, is currently testing its previous high here, whereas some of the other names have some percentage to get back there. So HES is showing relative strength. The problem is those contracts that they're buying, the 145s, are going to run you $282 per contract. And there's zero chance you're going to get filled on any sort of spread to bring that down. So unless you're willing to spend around $300 per contract, HES is just not worth it. Nice chart though. And the 140, what did I say, 145? The 145 price target makes sense. So that's, let me throw a fib here really quick and see. Yeah, it's too bad. That's not a bad setup, but it's expensive. Cosmos, KOS, integrated oil, mid cap, 5.89 ADR, sub $10 be a share trade. Not my favorite setup, but posting it because it's up 6% today. Uranium's finally hitting the board UEC. Not a great looking chart, but 50-day high. Tankers are still hitting. I remember we came up with that hypothesis that we saw, the first thing we noticed with energy wasn't even XLE, was it? We were like, why the fuck are oil tankers running? And we had this idea that potentially oil tankers were front running the action that we could potentially see in XLE. And although one instance of that actually occurring is not going to convince me that that's real, it did end up playing out that way, right? About 3 or 4 days after we realized that these oil tanker names and some of the marine shipping names that had an energy bias were running, all of a sudden XLE names started to pop too. So the market knows a lot more than anybody else because there's a lot of very wealthy individuals that are privy to information that we don't have. STNG did hit 50-day highs today. This was one of those trades that I missed out on off of the April-May breakout that I wish I would have taken. As of right now, though, I think it's just a puzzle piece. Posting it there, though, because that was the original marine shipping name that we were looking at to confirm a potential XLE push. There is a mid-cap integrated oil name out of Argentina, YPF, that's up 7.5% today. This is a change of sentiment. There's probably going to be zero options availability on this name. There is options availability on this name. What the fuck? I'm going to post the chart. I don't know what to I don't know what to think of this chart whatsoever. I think there's better opportunities that are less volatile, but there is options availability on this, and this is very most definitely a breakout. 1.84 R vol, meaning this is set up for a potential BRB tomorrow. So if we do get a pullback tomorrow near 515, 550 rather, or 56, could be an opportunity. Go out to the Octobers. These are cheap. They're cheap for a reason, because this stock is fucking cheap. It's probably better just to buy the shares, to be 100% honest with you. But there is open interest on these. 6.87 IV or 68.7 IV on those Octobers. There's even enough volume to get long some call debit spreads if you really wanted to. I would not suggest that, but piece of the puzzle there. YPF, Argentinian stock. Ian, I can't imagine you held your Gush position while you were on vacation. Or were you in Gush? I think it was Gush.
No, I got stopped.
For profit, I'm assuming? A small profit?
I think it was like break even on.
Gotcha. I know there was a nasty pullback on one of the days.
Yeah, and then it like reversed.
Yeah.
That same day.
Fucking market's rigged, bro. Didn't anybody tell you? Okay. And all the rest of the stuff, the setups look like crap. Let's look at CEG since Mike brought that up. High and tight on CEG. Let's see here. So this is a trade that we took as a group. A few of us got into it back on the March breakout. We missed this breakout, though, in the beginning of August. So preface that. We did trade this from 55 up near 66. Didn't nail the entire move, but it was an awesome. This is our big blue sky setup that we were talking about earlier. There's a time and place where these recent IPOs form ranges. We buy the breakouts. They typically move very aggressively to the upside. We happen to capture this. A large portion of this. This was an awesome, pretty quick little 20%er. We failed to grab the August breakout, and we have basically been sitting here on our hands watching CEG continually hit all-time highs as utilities were hitting all-time highs. But Mike just pointed out we are getting a consolidation phase here, so this is now technically an area that we could potentially buy the breakout of, or if you wanted to, short, and you shouldn't want to short this probably. But the reason why I bring it up is because it's a consolidation period that we've been in for 18 days now, and it gives us a range. You can buy the breakout above 82. You can short this thing below, looks like 79.5. I'm going to go ahead and post my chart as well, but it looks damn near similar to Mike's. This is a direct recipient of solar. I'll go through Koyfin really quick. Look at the exposure, Constellation Energy Group, ETF exposure. Let's look by shares held. Let's go through XLU. So the utilities sector owns 5.5 million shares at a 2.47 weighting. And let's see if we can get yeah, it's in a bunch of clean energy. So that's what it is. It's in a bunch of clean energy and it's in utilities. So it's going to be a positive recipient to the clean energy shove that we have been seeing. But we are starting to slow down in that front, which is potentially why CEG is slowing down as well. But something to consider longing if we want exposure into this part of the market at 82. We're not there yet, obviously 81. We'll see what happens tomorrow. But the pivot point is going to be around 82, 82.5. Checking the chain just because last time we took shares on this, looks like we're taking shares again. This is not going to be something that you're going to be wanting to buy on the chain. Zero liquidity. Not enough for us to get in. Okay. Got 13 minutes. Questions are available. Anybody want any potential trades to be looked at, positions to be looked at, feel free. I'm going to stop talking for about 3 minutes so I can drink some water because my throat hurts. And yeah, go ahead and ask the questions. We'll answer them. Okay, so let's talk about that. I want to talk more about shorts tonight, just because I think that it requires a more in-depth conversation than briefly going over it end of session. But we can post Unity. We'll talk STNG right after this Unity. So had a general idea of buying Unity above 47, targeting 57. I don't remember if anybody actually nailed this trade, but that was the trade idea. It ended up playing out for whatever reason. I know that Alex, I believe, tried to buy a BRB on this. We roasted him friendly like. We roasted him for buying that BRB at the end of last week. Now, Hannah wants to look at this as a potential short. The thing is just like we don't like things on the left-hand side of the chart when we're going long, I definitely don't like things on the left-hand side of the chart when we're going short. As a matter of fact, I hate it even more because the market's natural tendency is not to go down to begin with. And if you've ever traded through a bear market, which most of you have at this point, welcome to 8 months of shit, you know that 5 days of progress to the downside can be wiped out in a single hour after the open with if the market decides to rip. And so if I'm going to be taking shorts, they're going to be aggressive and they're going to be something that is going to give me a potential capitulation zone. And I'm looking at you right now and I don't see any sort of area for a potential capitulation because you have a shit ton of arguments going on from that $47 area all the way down towards potentially 29. And that's a huge range. That's like a 35 to 40% range. And so if I'm going to be shorting tech, I want to see something that's like falling off the side of a cliff, not something that's going to, has to wade through traffic, if that makes any sense. Anybody want to chime in on that? Because there's a few of you guys that we've shorted tech. Some plays were absolutely incredible, and some plays were incredible for a majority of it, and then we ended up closing near break even or potentially even minor losses. Anything you want to elaborate on? Anybody? If not, we'll go through STNG. I have no idea what's going on with MMM. All I know is that somebody on Guru Leaks or whatever is roasting somebody for posting like a 2,000% winner in MMM. I don't know why that's the only thing I saw about MMM. Yeah, there's an incredible amount of volume on it, and it's capitulated over the last 2 sessions.
Yeah, I believe that gain if they really got inputs on Friday, because that's a huge move for MMM.
Oh, I totally believe it. Guru Leaks is a good resource until he makes stupid little boo-boos like that hurt his credibility, but yeah. Any asshole could have bought a fucking weekly and made 2,000% on a move like that. So anyway. Yeah, I have no idea. Looks like MMM is probably under some financial troubles the way that looks. Those are not friendly candles. And at a 1.65 ADR on Friday, this thing moved 9.86. So you're looking at like a 4 times its ADR, and then you get a follow through on the day after. There's definitely something going on with MMM that either isn't announced yet or we haven't seen it. Let's talk STNG really quick. Vin says anything above 43 makes sense to me as a risk on level for sure. Yeah. You don't necessarily have to worry about anything on the left-hand side of the chart since price action goes back to 2017, and I just can't imagine too many people are bag holding a name like Scorpio Tankers from 2017. Could be wrong. Who knows? But yeah, above 43 makes sense. It's a 4.86 ADR, which means it moves pretty well. We can check the chain really quick, but I'm going to assume this is a shares trade. Let's check. Check the Octobers. Open interest on these things. You got the $49 call. That's pretty far out there. Wow, I'm surprised. You got the $49 calls. I'm kind of surprised. Wow. Hang on. You're looking at a 16% move for a 0.29 delta. $55 calls are going for about $57. I don't like it. Yeah, okay, so the chart looks fine on STNG. Above 43, you're in price discovery mode. Totally agree with you. The options chain is kind of a little wonky though. So I don't know if you're looking at taking shares or contracts, but if you do want to take contracts, the day of, we can talk through that, kind of verify which areas of the market or which areas of the chain rather to attack. But yeah, totally agree with you. Above 43 makes sense. Why not? You could play a pseudo, let's see, above 43. Depends on how tight you want to play this. I'd probably give it at least one ADR, maybe 1.5 ADR, stop out somewhere around there to give this thing an opportunity to move. ADR of 4.86 would mean something basically sub 40, right underneath $40, and lower your position size to account for that higher potential stop out. 5% stop isn't the end of the world, right? If that's what the charts say is optimal, run the 5% stop, just lower your position size so the overall max loss on that stop out isn't going to kill you. Makes sense. Cool. I appreciate you bringing that up. There's other names within that same area too. We can probably look at them tonight during the strategy session. Tonight, 7 p.m., just so everyone's aware. The marine shipping industry, specifically with these oil tanker names, a lot of them are showing the same setup as STNG. So STNG might be the one on the scanners, but there's some flying under the radar. They might have just not hit 50-day highs today. So we can look at those tonight. I'm going to go ahead and stop the stream 5 minutes early.